All right, Quasar Markets Live. Y'all love him. Michael Stewart, my mentor for many, many years. Most of you knew when I wanted to be a firefighter and astronaut, I wanted to be a stockbroker. Couldn't help it. And I would go sit in Mike Stewart's office after he had just left Tulane University with his big bad degree in his new Series 7. And Mike, you've been a stalwart in the markets for many decades, and it's interesting to see the volatility and the changes over time of the technology and the entrances of the different classes of people coming into Wall Street. And so, as investors, what are you seeing differently now that you hadn't seen in the past?
Well, obviously, with technology, things move a lot faster than what they did when we first started. I mean, I can remember where when I first started, we'd actually have to telephone in an order, and then obviously, as things go on and on, technology's allowed things to move a lot faster than what they did. Because of that, I think a lot more people it gives a lot more people access to the markets and the information that's available as well.
I'm sorry about that, Mike. My computer crashed on me. We're still live here, so I apologize for that. I'm looking around like, what's going on? All right, Mike. And so, I don't know where I left you, but let's talk about that for a second. As we talk about the markets in general, it's that the volatility is really picking up. Like, it is just gone haywire. And the volatility, not just zero DTEs, but when you talk about gold and silver and you talk about commodities, we've got like literally people who are now investing in things that don't really understand what they're investing in. And how do you, as Mike Stewart and Ameriprise and what you're doing, how do you keep people grounded? How do you keep people in this situation where, all right, I'm going to stay in the markets, I'm not going to get busted out, and how do you bring people back to normality, as I've said lately?
Well, I guess that kind of goes along with the technology that we have. Is with technology, there's so much more information, and so people are utilizing a lot of things that maybe they don't fully understand in the capability, which creates that volatility. So when we're talking with clients, basically it's going back to the basics. It's why do you want to invest in that? And I've always said that, when you're investing, we're more into the financial planning. So, we want to use the investment as the tool to help reach that goal. And so that we kind of use that as our foundation and the premise for investing. And then we talk about what kind of investments to use to reach those goals. So that's kind of what we're trying to do with our clients.
All right, so let's talk about that for a second, Mike. Let's go back to the very beginning when you and I got into this, and let's say I come to you as a client, and I'm just a kid from Southern Illinois, and I go, okay, I got about $10,000. I don't know what the hell to do with it, Mike. What am I doing with my $10,000? How am I going to start this process? What do I need to do? Am I just going to give it to you? Because you see this new look, Mike, that I call it the great wealth transfer. I've said this many times, and they're just not going to hand it over to JP Morgan and Goldman Sachs anymore. They're going to hand it to Robinhood. They're going to hand it to E-Trade. But how do you process that, and how do you get them to invest with yourselves, shall we say?
Well, again, it goes back to, we're trying to use the investments as the tools. And so when you kind of approach it from that standpoint, people then realize that, okay, I use the example, you can take and you can hammer a nail into the wall using a screwdriver, using your shoe or whatever the case may be. But the best tool to utilize is a hammer to do that. And so when we're talking with clients, we get to know them and what their goals are. And we're trying to get them to focus on the right tool to use to reach the goal that they want with this money. So if you were to come into my office, that's our conversation. That's where we would start is, what do you want this money to do? What do you need it for? So
yeah, it's very simple, Mike. I want to make $1 billion on my $10,000. How do I do that? Right. I mean, that's what you're hearing today, right? It seems like there's more of a gambling mentality with prediction markets, and I'm okay with all of that, right? But what I'm not okay with is this gambling mentality. What am I missing here?
I don't know that you're missing anything, because I have that same problem. When I talk to somebody and they talk about, well, that's a gamble or whatever the case may be, I will try to talk to the individual and ask them why they think it's a gamble. But just in general, I think too that some of the media outlets don't help the cause, and that's kind of what they are alluding to as well. As here's a way to get rich quick, and some of the commercials that we see, and so on and so forth. So it can be challenging when it comes to stuff like that.
Yeah, it feels like when I'm watching CNBC and Bloomberg and all the great channels on Fox Biz, that all of a sudden I'm seeing all these gold commercials. Right. I'm seeing prediction market commercials. Back in the day, the SEC would have said, no, shame, shame, shame. Why are we seeing this now? Like, what is going on here?
That is a great question. And one of the things that, you and I go way back. And one of the things, I don't know if I told you to read a book a long time ago called The Wealthy Barber. I don't know if you did it or not. But one of the things that he talked about was, when you start getting your advice in the barbershop, it's a little too late for that. Exactly. And I think when we start to get our advice from a commercial, TV commercial, that's a warning sign that we've got to be careful on something like that.
Yeah, people always ask me, when is it time to buy gold? It's when you don't see commercials on TV. When's it time to sell? Because they're trying to get rid of their gold. Guess what? Right. I got, when the gold price started falling, I got so many phone calls. Hey, you want to buy a bar of gold? No, I do not want to buy a bar of gold. Thank you very much. I'm happy to sell it to you. And you look at it from, what, Mike, I'm going to do this. I'm going to bring in one of my favorite traders out of Las Vegas, Nevada. You two should probably get along quite well. He's in a little bit early. I'm going to bring Bubba in. Hopefully you guys can, let's have a round table. I love doing these round tables more than anything. I'm glad he came in, Bubba. Bubba, for those of you out there that don't know, it's an awesome stream because Mike Stewart is one of my mentors, and both of you guys have believed in me with this company. And let's talk about this a little bit. Bubba, you're on the far right. I'm not going to say the crazy nut jobs, but Mike and I are probably in the middle. Talk to us about what's going on. It seems all of a sudden we've all been right here that the markets are chilling out a bit, huh?
Oh, I think they're chilling out, and I think that this is just the beginning of chilling out. I mean, if you look at the Case-Shiller Cape ratio, I mean, we're over 40. I mean, the average over history, the median is 18. So, yeah. I mean, again, then you look at the 306% of market value to the M2 money supply. We've never been this high. So at the end of the day, I mean, yeah, we had a sell-off this morning, a little bit of a rally, but I think this is just the beginning of what the selling is going to look like when it's all said and done.
Mike, you think the selling has just started, or you think we're done?
No, I think there's going to be some more selling. I think it's going to be more of a rotation, though, and maybe out of the things that are more overvalued, a little frothy right now. Maybe I see more mid and small cap, probably more opportunities right there with a rotation on that. But
I
agree. There's some frothy things out there right now.
I bought Amazon over the last few days. Is this dip buying time for those kind of companies?
Listen, I think it can be a dip buy company. Listen, I don't know the answer to what the right company to buy, but I can tell you this. Okay, in 2008, Amazon was $30 in November of 2008. The market itself didn't bottom until April of 09 or March 09, and Amazon was already 60. Okay. Right. Again, when I talk about the markets in general, I think the broad perspective is we're going a lot lower. Does that mean that stocks like Amazon or stocks like Microsoft that have already taken it up can't they be higher in 6 months from now? Yeah, I would. If you ask me, I'd say we'd be down. The general markets would be down 20% in 6 months. But there's a lot of stocks that will be higher than they are today because they've already taken the beat down. But I think the big warning sign you can look at is a lot of these smaller capitalized AI stocks, a lot of these little ones have gotten hammered and have lost 70 to 80% of their value already. I think that will lead into the selling of the bigger ones. And again, they may be very well buys right now. So again, trying to say that every stock is going to go down, the initial big sell-off that we will get, probably all will participate, but every stock will bottom in its own point. And Amazon is down from 245 to 195. That's a pretty decent hit.
It is. And Mr. Series 7, Mike, tell me what stocks I should be looking at and buying here.
Well, I think you ought to stick with quality right now. A lot of people have jumped on that bandwagon of, AI technology and things like that. And that's what's getting whipsawed a lot here lately. So I think if you stick with quality things like dividend paying and utilities right now and things like that are probably areas to look at.
Yeah, but I think one thing to Michael's point, okay, the stock market itself in history has gone up an average of 8.5% year over year and 10% year over year since 1950. Okay, so if you buy good companies that are going to be in business, yeah, they might take a haircut, but you don't have to trade in and out of them. The average guy shouldn't be trading in and out of them. They should hold them and let them grow because they will gain value. Buying the garbage is for traders who have feelings and can watch it and aren't afraid to take the loss when the loss comes. Okay, that I think is the difference. If you're talking to an investor, buy good, solid companies that are going to grow, that are going to be in business 20 years from now. That's what you want to look for. If you're a trader, you can look for other things and look to trade the market itself. But listen, I never get out of my core position. You know that I'm hedged. You know that I built a model that uses derivatives to hedge, that continues to buy stock when they're going down. Every 3% move down, I'm adding to my portfolio automatically. I don't care. I am not looking at that.
Okay, but what are you buying? Tell us what you're buying.
Well, I've been buying a lot of coin. I've been buying a lot of MSTR. I've been buying Amazon. I bought Apple on the first dip down. I mean, the high quality companies or the companies that I believe are real. I mean, I'm a believer in Bitcoin. I think that coin's a real company. I think they're going to be solid. MSTR might be a little bit of a risk take there, but I can afford to take the risk, and I'm not afraid of it because I can take the explosion. But I think the average guy should be looking. The old days it used to be, buy IBM, buy the big blue, but buy companies that make money. Okay, that is, as much as I have disdain for Warren Buffett, the one thing he always said is the company's got to make money. Okay,
That's right.
If they don't make money, then there's a good chance they might not survive.
Right.
Yeah, I agree with that. And okay, so let's get to it. Federal Reserve. I know you're both. Is the market anticipating a Federal Reserve chat? Are they waiting on these numbers for inflation on Friday? What is it? The trepidation. I mean, we've seen the Dow this morning fall 250, up 250, now up 100. Nasdaq's been all over the board, and the SPOOs have been really, really crazy. What are we looking for? What are people looking for to give them a better answer? Is it Iran? Is it Ukraine? I know both of you have a good answer for that. So give it to me.
Todd, go right ahead.
Well, I listen. I don't think they're waiting for anything. I think, again, I look at the market. I don't think the news means anything. I think we're already priced in. We have it, and we're in the age of technology. And when I go back to when I started in 1980, we actually had to stand in front of a little 12-inch LED screen looking for the news to come out. It actually meant something. Today, all the news is out. There's no surprises. The only thing that will change the market, the only thing that people will react to would be something of a very bad news situation, something as like a terrorist attack, for example. I hate to bring that up, but that would be the financial news is all BS anyways. Right. Are you going to tell me that we really created 130,000 jobs last week? Of course, they didn't tell you that they revalued last year's from 540 to 120. Okay. So again, the numbers that we get from the government are garbage to begin with. They mean nothing. You want to look at a real number? ISM manufacturing. Manufacturing stinks. Okay. ISM services, those are private numbers, not controlled by the government. They have no axe to grind either way. They report the numbers as they come in. Other than that, I don't think people look. They look at the sentiment and they continue to buy, and they ignore every warning sign that is out there. As the Cape Shiller number, that's a number that's important. The average PE ratio, that's important. The 306%, the M2 money supply, that's important. The K-shaped economy, that's important. But people ignore it because either they can't afford it and they're not in, or the ones that are in say, well, it's going to go up anyways. And of course, they'll get trashed and they'll continue to over leverage themselves. And that is the bigger point, is people get themselves too leveraged in a market like this. And when it does fall, leverage is disastrous. Leverage is great in your favor. And when you're against you, it breaks you.
Yeah.
Yeah, that's a very good point, Mike. Do you let any of your customers and clients, do you let them lever up at all?
Try to avoid that. I mean, we do have some people that use it, but they use it more as a line of credit as opposed to leveraging to buy investments. History tells, we went through a bad market in the late 90s and saw leverage to the hilt then, and saw a lot of bad things happen then. So we discourage that.
When I hear the words, this time it's different, what does that mean to you guys?
It's never different.
Right.
Mike, now I'll get back to you. I got a lot to say on the topic.
Mike, you both, all three of us have lived through all of these different craziness, right? And by the way, we're getting lots of likes and hearts and thumbs up on this, guys. I really, this is the kind of conversation, shall we say, that I really like, because the three of us have something like 120 years of experience. Let's put this all to good use. We've all three seen almost every up and down in the market. How does this time, and I just said the question different, but how does this time feel different? Is it technology? Is it news? Is it the players in the game? Is it the amount of money that's being involved? What is it that's spooking this craziness right now?
It doesn't feel different to me. I see
agree
the same warning signs that I saw in 2008. I see the same warning signs I saw in 2000. I see the same warning signs I saw in 1987. I was on the floor for all three of those events. And now you have massive amounts of debt. Housing sales are falling apart, and not everywhere in the country, but in many parts. But if it's falling apart somewhere, it's a favor to start falling apart elsewhere. But the real problem that I see is the massive amount of debt, not only from the government, but the citizens, the people, are getting not forced in, they're being sucked in to borrow more money that they don't have, but because they're getting such favorable terms, like credit card companies are allowing you to 2027 to pay that money back.
Right.
Well, again, we all know that if you don't, you think you can pay for it in 2027, but when you get there, you can't. And guess what? The interest goes back to day one at 29%, and you never get out of debt. So the first thing I could ever say to any investor, before you invest with anybody, make sure that you don't have a credit card debt, because you're not going to make 29% a year.
Right. I would agree with that 100%. I think you're spot on with that. You can't borrow yourself out of debt, and a lot of people
can't be like the government, right? Because the difference is when you and I get in that problem, we have to go to bankruptcy, go to jail.
That's right.
The government just makes more money and makes shares are worth less.
That's right.
Okay, so we went back to the original question. Like, what do you tell a new person that's investing? That you maybe they're a new family. They just got married and they have to go in debt, and they're looking to buy a house, 4.058% now on the 10-year. I mean, the rates seem to be low, and we just heard from two Fed members. Goolsbee also said he could also see more rate cuts in the future. Trump wants more rate cuts in the future, and people are literally almost to the point where they're throwing their keys back at the house again, like they did in 08. You sure we're not scared here?
Fed rates mean nothing to mortgage rates. Let's be clear.
Okay.
The Federal Reserve is for the banks. It is not for you and me. Okay?
But the
mortgage rates have not come down.
Come on.
The banks have not come down, Steve. Mr. Big Beat. Rates have not come down. Would they come down from 7 to 6 3/4?
Yeah.
Look, the Federal Reserve is designed for the banks only. Okay. They are paying the banks not to lend out as much money right now. Okay. This is the overnight rate we're talking about, not the 10-year. The 10-year is higher today than it was when they made their first rate cut.
That's right.
And they just come back a little bit, which should be more of a concern to the consumer, that the 10-year notes are falling, which means there's more money flying into what is considered safety assets, because that's why the 10-year is coming down. But originally, the 10-year got back up to 4.5%, and the Fed had cut 100 basis points. So what does that tell you? The 10-year went up 100, the Fed rate went down 100. All that allowed was the banks to steal more money from the consumer. That's what it comes down to.
And so I'm putting
Michael laughing.
I'm putting my tinfoil hat on now.
Job. I know, Michael. I'm sorry.
No, we love this. We love this.
Call a spade, and it works.
In my hometown of Harrisburg, let's talk about that. What are people back home thinking about? I mean, you look at corn prices, you look at the futures prices and I just was looking at cocoa prices. My goodness, they've fallen out of bed. What are farmers thinking about? I just saw where several farmers are now literally giving up the farm, and it's hurting, right?
It is hurting. Yeah, it's tough. I mean, with prices and the input cost is probably the biggest factor that they're having to deal with. It's great that maybe the commodity price goes up, but when you look at the input costs and what's happened there, that's what's really putting the squeeze to the farmer right now.
So we're
right in the middle. We're just starting planting season,
right?
Okay, for all these guys, and anybody who chooses to plant, many of them are planting at a prospective loss before they put the crop in the ground. Okay, right. Then you tie into the fact that they pay, if the average rate is 7% for borrowing money, they're paying 9 to 10%. The farmers, their inputs are more than than what they're going to most likely produce. Right. Okay, especially in the Farm Belt, Iowa, Indiana, Illinois, not so bad because they're going to produce so much more. But you go out farther and you go where they're not producing 225 bushels an acre in corn, they're getting killed. Okay. Yeah. And a lot of farmers will choose not to plant. A lot of farmers are choosing to lease out their land because they can't.
And Mike, what are they planting this year? Are they planting corn? They're not planting beans this year, right?
No, actually, we've seen. Well, I haven't seen what they're putting out this year so far, but in the past, a lot of people have switched from corn to beans.
Okay, because of China's buying again.
That has nothing to do with China. China's bullshit. Come on, China's going to buy who's ever cheaper. And if there's a worldwide oversupply, which we are right now, Michael, do you agree with that or disagree?
Yeah, I agree with that.
Worldwide oversupply. China's not buying from us. They never bought from us when there was enough. They only buy from us when they had to. Again, I go back to when corn was $2 a bushel, soybeans were $4 a bushel, and wheat was $3. Okay. And every time they needed a rally, China's buying. Okay. And you'd get a 20 or 30 cent rally. Now at these prices, China's buying from who's ever cheaper. You think they care about their people or the quality of bean or corn they're going to buy? No, they don't care. They're going to buy the cheapest. So if we have a mass supply, which we do, you're not getting China's business.
Okay, well, let's talk about this then. Let's talk about cattle prices. Cattle prices are at multi-year highs, and Brazil's still pumping it up.
They're at all-time highs. And cattle, I don't know if this is – I'm a pretty much of a conspiracy guy, right? Now, there was a shortage in the herd 2 years ago. It started, which is when this rally started. Okay, I find it hard to believe with our technology and with what we can do that there's still a shortage in supply, but they're still crying short, which is what's keeping beef prices higher. Now, I came out of the beef industry. My dad was a peddler. Okay, I used to work on a truck delivering corned beef and all kinds of meat. All right, I understood it pretty well. Now I'm targeting just before St. Patrick's Day when the corned beef and cabbage get sold out, because I used to tell my dad in January, buy all the corned beef you can now, freeze it. We'll make a fortune in March, and then it's going to drop. And that's what's happening.
That's a U.S. thing. My wife will tell you that's not a thing in Ireland. All right, so let's get to it, Michael. So are the boys back home? Are they raising more cattle, or are they kicking cattle at the curb here?
No, they're kicking cattle to the curb. They just
man.
Yeah,
man, oh man. All right, I'll let you guys go out on this one last question. You guys fight it out. 60 to 90 days.
We're lovers, man.
Oh, I know. You guys are a lot alike in a lot of ways. 60 to 90 days out. S&P, SPOOs, higher or lower?
Lower.
Oh,
Significantly.
wow. What's the driver behind that? Besides what you've already said to me, was there something that you guys
massive debt, no money, no jobs, more layoffs coming? You already know that Amazon, Meta, and Google are talking about more layoffs already, and those are not Walmart jobs at $13 an hour. Those are, let's say, $100,000 and $150,000 a year plus jobs that are going to be gone. Okay, and they're not coming back. That's the problem. Those jobs are never coming back.
And Mike, in Southern Illinois, is AI is a part of the narrative there? Yeah,
I was just going to say, I think a lot of that's fear driven right now of what the future is for AI. That is it going to be job loss? Is it going to replace productivity of the employee? Yeah, I think that's a big driver of that. Yes.
And I talked about AI for 15 years. What is it now that's really changing the narrative in people's heads now than it was, say, a year or two ago?
I think people are really, really seeing what AI now for what it can do. I don't think they saw it a year ago. I mean, the new the generative AI and people using those things right now and seeing what they can do. I think that's where that fear is coming in right now.
Yeah, I sticker sometimes when I see people on social media now posting things that I did, a year or two ago, and now seeing that. And last week we saw C-Dance 2.0 out of China, putting two major Hollywood characters fighting each other. Let me ask this question. I know it's a little tough because it's a political question. I know Todd. I know where Michael. I know we both stand. Trump, come November. We know that after the midterms, almost always midterms to the end of the president's next in the term, there's always a win. It's never been a loss in the markets. It's always been up every single time. The midterms to the president's that year goes up every single time. Anything different this time around? Is Trump still popular where I'm from? Is Trump popular still in Nevada?
I mean, I don't know that he's so popular. I mean, he's popular with me, but I don't know how popular he is overall. I mean, again, it's hard to get a read. If you look at his approval ratings, they fly all over the place. But I do think that people that are in business, they like a lot of his policies. I think that he is more favorable to business and more favor that we do have a lack of capitalism in this country today, but I think he's more favorable to capitalism, versus socialism, which is where everybody wants to go. And of course, obviously, if you're rich, you would love socialism because it would destroy any future competition you would ever have. But I think he is as popular as he's ever been, which is he's never been, other than with Republicans, he's never been all that popular other than within his own party.
Yeah.
So, which is, pretty standard through most presidents. So I think with the exception of Reagan, and I think with the exception of Clinton in his first term. So.
Mike, hometown still loving Trump?
Yeah, I think he's still, people still like him around here. I think the big concern is, if we have the midterm changes and we flip the House, what's going to happen going forward? Is he going to be successful in trying to be business friendly? I think he's going to have a lot of pushback if that happens. And it's going to be very hard for him to get things done. So I don't know if it's going to be a win-win the next 2 years if that happens. I don't know.
Yeah, Cal Street now says that there's now an 85% chance the House flips. I can tell you, all my friends in Washington say the House flips, even Republicans. And a lot of my Republican friends, I won't say what senators I've talked to over the last week, on the Republican side say that they're fighting to keep the Senate. They don't, and Cal Street now says a 40% chance of a flip on the Senate too. So that could be an issue. But most people do like a split administration from the Republicans and Democrats on both sides, right?
That is
you would like to have what the actual Constitution was designed to do, to have some debate. Unfortunately,
there you go.
You don't really have any debate anymore. It's you against me. And it's really become, our government is a tragedy and is a travesty. It's broken down. It doesn't do anything it was meant to be done when it was originally written, the Constitution. And I think that's the bigger tragedy that someday we can talk about. But having people serve for 40, 50 years is a joke. Having people come into office worth $3 million and living worth $120 million is a joke, because they're just stealing our money.
Pelosi, yeah.
Well, I mean, it doesn't have to be Pelosi. Listen. Joe Biden, and again, I never liked Joe Biden. He's an anti-Semitic piece of shit anyways. But Joe Biden, him and Jill earned a total of $6 million in their entire working career. They left office worth $150 million. Where did the money come from? It came from you and me, the taxpayer. I mean, look, we have to get rid of these long-term. Mitch McConnell, same thing. Again, I won't pick either side. There should be no more than 2 terms for anybody. That's the bottom line. That's the only way you get true things done, and you get a true blend of a real mix versus making enemies and fighting inside. I mean, you go back to the days when they actually, they still screwed America, but at least they give you a fighting chance. Now they're going to give you a fighting chance. Okay,
Mike, you got to run for office?
Heavens no. Heavens no.
Bubba, the mayor out in Las Vegas is having a pretty good upswing, right?
Yeah. Now, listen, I mean, other than the crime, Vegas was a much better town when it was run by the gangsters.
I don't disagree with that. And this morning, I heard Mamdani say that he wants to raise housing taxes again. It just blows my mind. And I as much as I love the city and as much time as I spend there, I probably couldn't. I don't want to live there. I love the low taxes here in Florida.
Why would you want? Listen, why would you want to live in New York, Illinois, California? The 3 most, Chicago, New York, LA, the 3 best cities in the country, in the world, probably. Okay, but yet they make it so unbearable to want to live there, between the high costs, between the crime. They don't take care of things, and why? And this is more of a left issue. And again, I don't want to get political, but why the left doesn't want law and order, I'll never understand. Okay. Yeah. I don't understand how you can want this crime in your community and want it going on. And I don't, again, it just doesn't make sense to me. I grew up in Chicago. I grew up in the streets of Chicago. I know all about it. Okay. Yep. And I've watched it, and I've watched that city deteriorate. When Richard J. Daley was there, it was the greatest city in the world. Yeah. Now it's a sewer, and you got to watch where you walk.
And of course, I'm friends with Billy, his nephew. Okay, so let's get to it. I'll let you guys on this last one. This has been absolutely fantastic. We got lots of thumbs up, lots of hearts on this, guys, by the way. So YouTube, I'm going to have you guys back just maybe have your own show. But, when I look at the country as of right now and the split, this left and right, and, people feeling that things are good and people think it's bad with the UK economy. What is it that if you could say to the president right now, do this, not everything else you're thinking about, do one thing for your presidency, your legacy, what would you advise the president? Mike?
Our current president loves to talk, and I think that's probably his downfall. And I think if I were to tell to advise him, one of the things I would do is I like his gumption and I like his candidness, but he could tone down the rhetoric some. And I think if he toned down the rhetoric and tried to be more uniting, I think that's where this nation could really benefit from something like that. But I don't know that we can get him to do that.
No, we can't. But I agree with you, Michael. Again, he talks a lot, but he does have the art of the deal, which does work.
Right.
I will say one thing, Steve and Michael. I think that if they would allow the free markets to work, he has no business dealing in the interest rate market. It's not his job. It's not his business. Okay. Rates should not be lowered. Okay. The free market should decide what interest rates are. And if you go out to the peer-to-peer lenders that are out there, you're not getting 6%. You're not getting 8%. You're getting over 10. Okay. Which tells you where the true free market was. We got away in this country from an actual true free market. And if we would allow, if I could say to the president, let the free markets trade, they will tell you what the value of any asset class should be, because that's how the free market works. And that is what we have destroyed over the years. And again, if he continues to meddle in the interest rate market, which I think he's wrong, okay, I think that's the bigger problem, because lower rates are no benefit to 95% of the population.
Man, I love this. You guys are smart people, and I think more people should listen to you guys and not listen to all the nonsense out there in the news. All right, boys and girls, I will see you right back here next week at the same time, and love all.
Nice to meet you.
Likewise.
All right, Quasar Markets Live. We'll see you guys next time.
Big Beat, the man on the street. Thank you, sir. I'll see you later.
Thank you, sir.
Thank you, guys.